Hello, this is Ahura again, and I'm here with you today to review the market to see generally overall what is going on in the market, what happened, and what we are expecting to see in the market, and our expectations from the charts. First, I have to mention that we just finished the worst month since March 2020. The September was amazingly disappointing with the mostly economic data and stock market corrections, or can say the falling or the correction or whatever we call it. And also, we are starting a week, we are starting October, we are starting another new week in this 4th of October. Actually, the 1st of October, it was a Friday, so we didn't have much in the first day. This week gonna be starting of the real starting of the October. Monday and Tuesday will be holiday in China. And about the financial market today, the most important today, our focus in the market should be on an OPEC Plus meeting. OPEC Plus meeting they will discuss about the overall market situation, oil market, energy market situation, especially oil market situation, and they will decide whether they have to increase the supply or not. They will review the market demand and the market situation, the latest prices. We are expecting to see a little bit more supply in the market, because some countries like Russia, they are not that much happy from more prices, higher prices in the market. Well, because the reason is that this situation can bring more more shale companies on the market, and it's not as much as good that we could think for Russian companies. This is the general little see. So let's see what's gonna happen and they will do. Probably they will increase a little bit the supply. On the other hand, in the U.S., in last days, Miss Loretta Mester, that earlier before she was supporting the dovish policies, she also joined the campaign of the hawkish campaigns, and she mentioned in the last day's speech, in her speeches in the last days, that the inflation situation is fine. It's not fine. It's a little bit more than target, but what we can see is that it will be declined in 2002 and 2022 and 2023. So we have to start tapering from November and rate hikes from next year. On the other hand, Mr. Kashkari also had his speeches, and he told that the market is not, the recovery, especially in the labor market, is not as good as we were expecting. So we should not start rate hikes earlier than 2024. So this is a very big kind of differences in between the comments to starting rate hikes from 2022 and to do not start rate hikes before 2024. So we have to wait and see in this month, in the end of the month, when the FOMC members, they will come together, what they will decide. For now, what we know is that the differences between the idea is so huge, and we have so much so much comments from really both sides, from the dovish side and from the hawkish side. What we have to see is, but what this week will tell us, in the end of the week, we will have the non-farm payrolls, and this non-farm payrolls will tell us what we have to wait in the market. For today, as I mentioned, the latest, and also in the Asian market, still the China Evergrande tensions and the worries and the concerns is not over yet, and still market is really worried about the future, about the fate of China Evergrande, and will they be able to pay back their debts. In the States, Mr. Biden again started talking about or increasing the current infrastructural bill to up to 2.2 billion, not from just like 1.9 to 0.2 billion, from just like another stimulus, and he's talking about another stimulus to see what kind of, actually I can say that expending bills. Yeah, he says that we reached the deal to make it to up to $2.3 trillion. So see what's kind of, we will have the more update today or tomorrow to see what he is proposing another bill. But the thing is that still the Congress, the Senate, and none of the parties, they didn't come together. They didn't come to the final results for the debt ceiling. The debt ceilings we have to find some way out for that before October 18. Even thought if for the short time they agreed for till December budget spending, government spending bills, but if they do not come together till October 18 and they don't find a way out from this, we will have stupidly shut down in a country for more than 6 million jobs, and to see up to 6 million actually, or more than something around the 6 million jobs, and it will be the worst shutdown since 2013 if it happens. I don't think that it's going to happen, but if it happens, many of employees should start 2022, should start the new year from their home and unemployed. But however, this is the overall situation, overall the market sentiment. So we have some concerns about the debt ceiling. We have that they have to find a way together to find a common way to pass this bill. Otherwise, the government will be shut down in December. Actually, till October 18, we have still 14 days, 2 weeks totally, 2 complete weeks to come together. So it's not a short term. So we shouldn't be worried that much about that. The markets also will be following the comments from Federal Reserve's members, and also we shouldn't forget about today's OPEC meeting. This is the overall market, what's going on in the fundamentally, and about the news. The most important news that we have to follow by now are these news. So in the market, as we see these news together and these comments and these events that we had all over the world, we had from different countries, different economies. In the end of the day, I have to tell that, sorry, I have to say that before going to the chart, I have to tell that today we have not that much in economic calendar. We have factory orders, factory orders we have in the States. That it's also kind of important because it will tell us that what is the recovery in the production, in the producing, and what's the factories, how the factories are doing in the recovery. So we have to follow this. It will be important. It will tell us about the employment also. If the factory orders increase, and if we see the increase in the factory orders, it means that we will see the increase in the job in the labor market as well. So it's important. And on the other hand, in Canada also we had what we have in Canada. We had something in Canada. Let me check it. This is the more simple. We don't have that much important news from just in Canada we have housing data, building permits. In Canada we have the building permits and housing data. We see that we have to see what's going on there. So as I mentioned, this misunderstanding between the FOMC members, this different ideas in one hand, and weak economic data in the last days, and also the weaker than expected labor market data on last Thursday. It altogether increased the market risk again in the beginning of the week after a little bit decrease, a little bit easing on Friday. Still, we can see that the market risk, the weeks is about 20 and still increasing. So in overall view, we can see that October also the overall market sentiment will be a little bit concerned. We will have some concerns in the market, and market risk still will be a little bit high around 2021 and this area. We should not see. I am not waiting to see the market concern to increase. For today, as long as we are talking about it today, we are waiting to see a little bit more increase in the market risk, which will end to more demand for US dollar. US dollar after a little bit side movement and ease in the last days of Thursday and Friday of last week. Today, in the beginning of the day, increased a little bit, something like 0.05% is increased. and with the increasing risk in the market, we're expecting the US dollar to increase a little bit more. This increase in the market risk will increase the demand for besides the US dollar, it will increase the demand for gold as well. As the market, as long as the price is above 1,760 increase, we can see the gold recovery in the gold as well a little bit from the last week's falling. The increase could go over not 1,800, not to 1,830. We can see we could probably see the correction before next downtrend. We can see the correction up to maximum 1,790, the 61.8% of the Fibonacci. We can see a little bit correction to 1,790 before another fall. Why I'm saying another fall? Because the October should be a little bit disappointing, but it's not the market situation. The overall market economic situation is not that bad. About the oil market, as you know, the concerns between the Iranian and Azerbaijan and Iran is increasing in the last days, and both countries they are oil producers. So if we can see these concerns more about between Iran and Azerbaijan and Turkey in one hand, Iran and Armenia in one hand, and Azeris and Turkish in other hand, they can increase the market risk as well in Middle East, and it can affect the oil price as well. However, today oil price will kind of will be waiting a little bit cautiously for this. But however, since we're waiting to see a little bit more supply in the market, probably oil prices will be a little bit soft around these areas, about the 74, 75, and we can see a little bit like side movement with the downside. With the a little bit with the ease from this year, just like not, I cannot say the downside movement or downtrend, it's really not with the downtrend, but it will be somewhere like a little bit weaker movement around 74, 75, these areas, because as I told, we are in today's meeting, we are waiting to see that the OPEC Plus members they will a little bit increase the supply, and this increase in the supply from the next month emotionally will affect the market probably, and we can see a little bit ease in the market. However, the market also, as I told them, the concerns about the tensions between Iran and Azeris, Azerbaijan, it's not. It is important, but for now, since it's not like warring concerns, it's not like going to the war or something like that, it will affect the market a little bit, not that much, but however, it should be important for the market, and we have to follow that news as well for the oil and overall energy markets. In the stock market, as we see in SP 500, after a little bit recovery on Friday, in the last hours of the Friday, we can see recovery that we saw in the last hours of Friday, and almost they regained all the loss of the Thursday and Friday. The ease in the market, increasing the risk in the market, will put the US stock market under pressure. And this week, I'm now waiting for any uptrend from here in the stock market. But overall, the market is like side movement with the downside interests, like a downside interest with side movement with the downside interest for the overall the week for today. Since we are under pivot point, today's pivot point at 4,360 kind of, under this 4,360, under this market will be more. We'll have more downside interest, and we can see the RSI also. You'll see OBB trend line also decreasing, RSI also decreasing, so the price also is a little bit decreasing. So we can see that overall under, especially as long as it's trading under pivot point, and if it can breach the under 20 middle line of the Bollinger Bands, which sits on 4,330. Yeah, 4,331 or 4,330. If we breach the 4,330, which is we are now on 4,340, under 4,330, it will open the doors for under 4,300, something like 4,270, 60 and 70 for end of the day. So for S&P 500, same story we have in other stock markets. In the financial, in a crypto market, in currency, in the currency market, US dollar increase, and as long as US dollar increase today, we can see its crosses like a pound, like a euro, like a yen to lose the ground against US dollar. So weakness against the US dollar crosses will be expected. Same things for the for Japanese yen crosses as well, because Japanese yen also has a safe haven. Its demand also is increasing. On the crypto market, as you know, Mr. Biden told that they are working on bringing 30 countries together to work on to kind of legalize the crypto market. What the Biden means is that they want to bring some 30 countries together to legalize the market and stop using the cryptocurrencies in cyber attacks, in cyber crimes, totally, and stuff like that. So this fund was emotionally should kind of affect the market negative, should have almost a negative effect on the market, because if they do together, if they do it, so it means that the world totally, if we bring 30 countries together and they make some, they come together, they come to some points at the end of the day, probably they will make more, they will create more law, more legalization, but they are not telling that they are going to illegal, they're going to ban the cryptocurrencies, but they will legalize it, and it will be more, for the banking system, for the governments, it should be more clear to see what is going on in the crypto market, because of this cyber attacks, of these crimes that the cryptocurrencies that they're using in the crimes. This is the overall market, and so this fundamentally should be negative for crypto market. That's why we can see the ease in the cryptocurrencies. The same thing happened for the Bitcoin, same thing happened for the Ripple. Again, it's trying to go under $1. Ethereum also is the same. Ethereum also it's back under its key point at 3,360. Under 3,360, the decrease we can see more decrease in where I say this, as you can see this level 3,360 is a very important level for the Ethereum, and under this level when it's back under this level, it means that if it cannot stay above this level and trading under this level, under 3,360, more bearish is expected, and we can see lower prices. Overall, the market for the cryptocurrencies is not positive. This is overall what is going on in the market, what happened, and what we are waiting. Hope it was useful for you, and hope it was fine for you. Please let me know your idea for the next days, what you want to see, what you want to hear more, what you want to know about technically or fundamentally. Usually I will talk about technical fundamental, but tell me your idea. I would like to know what you want, what you need, and continuing these videos based on your comments. Thank you so much, and goodbye till Friday, tomorrow. Sorry.